if you listen to Trump and Besant and everybody, they're like, first get the dollar down, get rates down, get oil down, get the tariffs done, get some tax revenues coming in from that, maybe give them out to some people, the bottom 50%, whatever it is that they do with this. And then it's about growth because they need the economy growing. And Besant has been really clear about this. Is like, we need Main Street to be making money again. And the issue has been rates have been too damn high. And they need to get the ISM through 50 and accelerating higher, which is the classic sign of the next phase of the cycle, which is when liquidity is really happening, the business cycle's happening, earnings get recycled, people start taking risk. That all lies ahead. But because the ISM is still bottoming, which is unbelievable, it's the longest bottoming pattern, I think, in the history of the ISM now, it kind of almost certainly pushes the cycle into 2026, which means we've got 12 months ahead of us.
Today, Real Vision CEO Raoul breaks down what's really happening in the market and why it matters for Bitcoin. He recently shared his insights on the current economic uncertainty, with tariffs and recession fears creating market volatility. Pal believes a major market rally is on the horizon, and Bitcoin is positioned to benefit from it. Lately, Bitcoin has been acting more like a risk asset, meaning if the market recovers, Bitcoin is expected to surge along with it. However, the uncertainty remains crucial. If the market stays stagnant, Bitcoin could face short-term pressure. Currently, Bitcoin's price sits just below $82,900, and we could see a sharp recovery in the next week. The bottom line is that Bitcoin's next big move will depend on how these factors play out. Let's dive into the latest interview with Raoul as he shares his market predictions for the coming days and week. Drop your comments down below. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
There's a reaction to the Trump headlines, yes, of course, but a lot of this was baked in the cake because of liquidity tightening by the rising dollar and rising rates last year. You know, price action in Bitcoin is actually not that bad today, not like the Nasdaq's getting nuked. And I'll talk about the Nasdaq in a sec as well. So global M2 versus Bitcoin, either a 10-week lead or a 12-week lead, doesn't really matter. The Nasdaq is all the same as well. You can see from the chart here, we're kind of in the bottoming zone. Bitcoin, 3-month percentage rate of change, has actually priced in all of the tightening of financial conditions and should very soon start pricing in the other side, which is this financial conditions easing. Now, this will be much higher again because of the last few days. So for me, it's kind of expected. Now, you can see from the black line, which is forward-looking, 10 weeks, and this doesn't take into account the current move in the dollar and rates and oil. And, you know, that just so people are aware, financial conditions, different people measure it different ways, but one of the easiest ways is, you know, an amalgamation of rates, the dollar, and some commodity prices, input prices. And we've seen a massive move in oil. We've seen a massive move in rates. They formed a nice head and shoulders top. Looks like, you know, we should see rates back down at 3.5% in 10 years. And we've seen an enormous move in the dollar as well. It's a gigantic move in the dollar. And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like, China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods, and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar, and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing, because we've both identified it's like next 3 months, for sure higher. There'll be consolidations. Yeah. Next 6 months, probably next 12 months. That's kind of how it feels. Pretty certain. Now, the question is whether it's next month higher, which I actually think. I think we probably end up, you know, higher within 2 weeks' time than we are today. Put it that way. And so global liquidity means that a lot of it's going to be driven by the dollar. which is now trending lower. And if it breaks kind of the 100 level, it can move down to, in DXY, it can break, it can move down to 90 or so, which would be, a good cyclical dollar bear market in a structural dollar bull. Then we've got the central banks and others, and that's driven probably by China, the US, and others, I'm guessing, using other liquidity measures within that. So, China's probably the big one in that. Bitcoin has been dominant. It was dominant all up until this point in the prior cycles in 2017 and also in 21. It stays dominant much longer than everybody expects. And then it tops. And this is the monthly D mark. And we put in a 13 top. And if I switch that to the daily now, we are getting very close to having a 9.13.9 top. That'll be 2 days away, which would match to me with the 9.13.13.9 on Solana as a bottom. There's a lot of things that are getting close to saying the liquidity cowbell is coming and the structure of the market may well change with it and usher in the next phase. What I talked all about, the second phase of the banana zone, which is really often alt season starts at this point. If I think about the crypto years, year 4 of the cycle being this year, year 4 of the cycle was 2017. Look what happened. Year 4 of the cycle was 2021. Look what happened. Year 4 of the cycle, we're coming in at the low, exactly as we did every time. It's interesting.
Raoul Pal highlights that the adoption of crypto is happening at the fastest pace of any investable asset in human history. By the end of 2025, he predicts there will be 1.1 billion active crypto wallets. The speed of this growth is hard to grasp, and it will lead to the quickest accumulation of wealth we've ever seen. This conclusion comes from years of research, with every chart and piece of data pointing to the same outcome. Liquidity drives everything, and crypto will be the top-performing asset. Raoul has been stressing to investors that all the right factors are aligning now, setting the stage for significant upward movements in crypto prices.
If you think this thing through, there's either the cyclical moves within the longer-term downtrend of Bitcoin being more dominant, but then there's these larger cyclical patterns of a much larger reset. Forward, we've got global M2, and the financial conditions index is screaming higher, whilst the economic surprises index of how the economic activity is versus expectation should start raising too. So the growth shock has largely been put in the price. I think I've got somewhere here how similar that is to the kind of 2021 period where you come into the year and then the whole thing just gets subdued for a period of time. Yeah. Also, the one I look at a lot, what's not on here, is 2017, where I think there's a lot of similarities, but it feels, and this is basically what I've always talked about when I talk about network activity and Metcalfe's law. This is a much more detailed way of establishing how vibrant is the network, how real is the activity, what's the longevity like, what's the growth like, because these are the things that drive price. We know that obviously global liquidity drives price, but the other thing is the network has to be valued, and network value is what drives the long-term secular trend above and beyond that of liquidity. This is the magic of why some cryptocurrencies do so well versus global liquidity. For example, we see that Bitcoin is almost like 8x the performance of the NASDAQ. And so the NASDAQ is 97.5% correlated to, or it has an R-squared of 0.97 to global liquidity. And Bitcoin's 85. The reason it's 85 is because when you get to a bull market, it actually wildly outperforms because of this, which is the network adoption. And we've had 7 of these corrections since the bottom. And the last cycle, we had 5 in the last year of the cycle. The one I look at a lot is 2017. We had 5 of them that were all like 30% plus. And then, so we bottom over the next 4 weeks, probably more sideways than sharp down. Obviously, alts probably still continue to bleed for that period of time because Bitcoin needs to reestablish itself. Coming out the other side, we've got a lot of discounted stuff because people, I think, mentally in their heads are like, oh, well, I want to start getting out by October because And so they keep getting worried we're not going to make the price returns. But we've got a year to make price returns. And the last year of a bull market, we've often seen 2, 3, 4, 500% returns.
Raoul Pal emphasizes that the recent market pattern, including pullbacks, is both normal and necessary to clear out weak hands and reset leverage. He points to Bitcoin's strong correlation with global liquidity, which continues to be supportive even during temporary liquidity gap. Raoul believes the market is preparing for another significant rally. Similarly, Matt Hogan, CIO of Bitwise, supports this view, highlighting the typical dip-then-rip pattern, where sharp declines are often followed by massive rallies, sometimes seeing gains of up to 190%. Both experts stress that patience is key, not panic, and the so-called banana zone is alive, just often misunderstood. Raoul Pal predicts that the next phase of the crypto cycle is crucial and is making major investments in his portfolio, with a focus on crypto and technology for the upcoming bull market. He remains bullish on digital assets, having significantly increased his position during the last bear market. He foresees substantial capital flowing into the crypto space, with major pension funds and institutional investors now entering the market. Raoul predicts that crypto is on track to become a $10 trillion digital asset class and believes this cycle will stand apart from previous ones due to the devaluation of fiat currencies, driving even more adoption and capital influx into the market. Raoul also anticipates that Bitcoin is heading toward an unprecedented price milestone, driven by a financial tidal wave that will propel cryptocurrencies to new heights. He views the crypto world as being on the verge of a seismic shift, with institutions quietly positioning themselves. Recently, he shared his perspective on the current economic uncertainty, pointing to market volatility caused by tariffs and recession fears, but remains confident that a major market rally is imminent. While Bitcoin has been trading as a risk asset, he suggests that if the broader market recovers, Bitcoin will surge as well. However, if the market remains stagnant, Bitcoin could face short-term pressure. Ultimately, Bitcoin's next big move depends on how these economic factors unfold. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.